What is good, guys? Welcome back to another video. In today's video we are going to be discussing how to use the Fibonacci tool in the easiest way possible by coupling it up with institutional candles, and how to choose which institutional candle to actually buy or sell from, especially if you have a series of institutional candles in a trade range. Okay, now before we get started, guys, a huge announcement. This one you've never heard before, so make sure you listen up. We are officially launching our official FU Academy YouTube channel. This is going to be a bit different to Momo FX, this current channel that you're watching, because there we are going to be posting a whole lot more on Wyckoff and order flow. This one is specifically going to be run by Lennox, our Wyckoff mentor, brilliant trader. Same goes for Debraj, our order flow mentor. So all videos there are going to be posted on Wyckoff and order flow. So make sure you tune into that channel, head over there, go show some support, subscribe, and yeah, let's transfer our army over there too, and let's build those channels together, because the value that's going to be dropped, they're the top three strategies realistic in the industry: Wyckoff, order flow, and smart money. Once you couple these three, you're going to have an absolutely killer strategy. So make sure you go ahead and do that. Now without further ado, let's get straight into the video. Okay, so here we are in the charts, guys. So as I said, today I'm going to show you the best way to use the Fibonacci tool when you're trading smart money. Okay, so when it comes to Fibonacci, it's very simple. Now, my levels, as you can see, are right here. I'm going to show you my settings real quick. Take a screenshot, take these down really quick. So as you can see, I don't really use that much. I'm only using the 88.6, 78.6, and 71. Okay. Now, how do we use the Fibonacci tool? As I always say, it's not a magic tool or anything. It just helps us identify the premium price levels to sell from, and then vice versa. Helps us identify the discounted areas to buy from. Okay, so when we're looking for sells, we are looking to sell everything. Okay, sorry, not everything. We're looking to sell only above the 0.5. This is the equilibrium. Okay, so this area right here is the 50%. So it isn't the worst place to sell out, but it isn't the best place either. We're targeting the 78.6, the 71, the 88.6. Vice versa, when we're looking for buys, we are looking to buy here. Okay, so we're looking to buy at these more discounted areas after we get a pullback. Now, how do we draw the fib? Drawing the fib is very simple. Now, first of all, you have to determine what range, what trading range are you trading? Are you trading the longer term trend? Are you trading the shorter term trend, etc.? So let me grab the replay tool, not because I'm I was just going to say, not because I'm trying to trade hindsight, but this is pretty much simple hindsight trading. But you can literally apply this as the market occurs, and I'll show you right now. It's very simple. Okay, so let's say we're trading this down move right here. We see this bear structure. Okay, we get this pullback. We get the break of structure here. We got this break of structure. The minute I get this break of structure, okay, once I get this break of structure, I just cleared a triple bottom, relatively equal lows. So once I do this, now I can confirm that I went from just a normal consolidation, broke structure to downside. Now what I look for is a pullback up, and then I look to sell. Okay, now there is two areas that I could potentially sell from here. Okay, I could potentially look to sell from here. Okay, and I look to sell from here. These would be the two areas of institution where my institutional candle would basically be located, or two areas of supply. Okay, now on a 4-hour time frame, this would simply just be a continuation candle. So and then this would be another institutional candle. Now the 3-hour just looks best for both here. So which one do I look to sell from? Okay, now the one that we look to sell from is simply the one that lines up with the Fibonacci tool. This is where Fibonacci works best. What you're trying to do is take it from high to low. Okay, because we're looking to sell, so we're taking it from high to low, and I'm going from wick to wick. So I go from one wick to the other wick. Okay, and I simply see where price is located. Okay, so now I'm looking right here, and I see this institutional candle is sitting right at my 886 on the open of that institutional candle. This is going to be the one where I'm going to be looking to sell from. Does not mean that we could potentially just get a pullback up and trade right up to the 50% equilibrium, and this is where this institutional candle is, but this one is more higher probable. Okay, This one's more high probable. This one's going to give you a much bigger move to the downside in general, a much probably higher risk to reward as well. You're getting in at higher prices, and this push down. So if price comes up here and pushes down, this move down will likely be much stronger than this move here, because simply think of it like this. Okay, think of the psychology. The more expensive price is, remember, the idea is to sell high and buy low. So the more higher we are up, when we're reaching the more premium price levels, okay, more institutions are taking profit. Okay, so we are more inclined to sell from this area. The institutions, they're going to be selling from this area, as well as mitigating their institutional candle. This is a more expensive area to sell. This is a more expensive area, so they should be looking for sells right here. And where do they look to buy? They look to buy at the discounted areas down below right here. Okay. So this would be the psychology right here. Whereas if you're looking to sell right here, yes, this is the equilibrium. So as I said, this is not the best place, but it's not the worst place either. But this move probably will not be as strong, because a lot of people probably will still be holding, expecting a more premium price levels. So the higher we are up, okay, the higher we are closer to the top of this trading range, the more probable the sell-off will occur, and the larger the move, because more people will be inclined to sell here. Simple psychology of sell high and buy low. All right. So why did I delete that? Okay, so let's see that play out. Plays on, it plays out, and there you go. So taps right into our institutional candle open. Boom, beautiful setup. Where do we target? We're first of all, our stop loss is above the high. We target potentially this imbalance right here. Okay, so fill in this imbalance, or we can take a look at this 2 hour, I believe 4 hour institutional candle. Let me delete all this very quick. Got a bit confusing right there. 3 hour, we were looking to sell from here, right? I believe there is some sort of institutional candle that we would have potentially targeted. Now, I did not take this trade. Yeah, so here we go. So 6 hour institutional candle. Once you see an institutional candle, this is usually a very good area for me to take profit. Okay, so I would have taken profit right here. I would not have targeted this low, or I would have taken partial profits, 75% maybe, and then just leave the rest, carry on till here. For the simple fact that once we approach a certain low, 3 scenarios can happen, and that is something that I discuss on my other video. The card's going to pop up there, so if you want to take a look at that after this, make sure to click on that card and you'll see the 3 scenarios that could potentially occur once you reach a low here. Okay, so that is how you use the Fibonacci tool. Let me give you guys another example. So let's take a look at USDMXN here, for example. Drop down to the 2 hour. Okay, so what do we have right here? We have a consolidation. We went from a bearish trend right here. We're just simply taking a look at 2 hour. Now, yes, I know the higher time frame was still bullish, okay, but just relative to this time frame right here, 2 hour, we were bearish. We started consolidating, so price accumulated right here, and we broke structure to the upside. Okay, we broke structure to the upside. So now what can we expect after a break of structure? This would be my 1, this would be my 2. Once you break that, you retest down here, and then you look to buy. Now, where do we actually zone in on the buy? And this is where we look. We look at where price broke structure right here. So price broke structure right here. You expect a retest back down to this level. Why? Because we have an institutional candle sitting right at this level. I mark out my institutional candle. Okay, I mark out my imbalance that I have here as well. So multiple reasons why price should come down here. We also have a continuation candle. Where does price react from? Where do I expect price to react from? I expect it to come down to the most discounted areas right here, sitting at this demand right here, before looking to buy. So I drag it from wick to wick. Price retraces straight away. Look how the open of the institutional candle lines up with our 88.6 level, touches that straight away. Price did not play around, and boom. That would have nearly hit your TP, and literally, it was very close to hitting your TP. In literally 4 hours. Okay, now obviously that price retraced back down. There could have been like a smaller institutional candle right here on the lower time frame. Not really going to focus on that, but yeah, there's a smaller institutional candle right here, as you can see on the 30-minute time frame. My take profit realistically would have been this high. Okay, so I would take it here, stop loss below the low, Okay, so below the close of the institutional candle, take profit would be here. And I would definitely be taking partials along the way. So that is how I would use the Fibonacci tool. As I said, make sure you take it from wick to wick. You want to see the area that you're selling from the institutional candle line up with one of the 3 levels, either discounted or the premium price levels. And yeah, that's about it, guys. So as I said, do not forget to check out our FU Academy channel. Lots and lots of value is going to be dropped there by Lennox regarding all Wyckoff, and by Dobraj regarding all order flow. So there's going to be a whole lot going on there. So make sure you're subbed to both of our channels. And yeah, we look forward to seeing you guys there too. So with that being said, hopefully everyone has a successful trading week, and I'll catch you guys on the next video. Bye bye.